What's up, everybody? Thank you for joining me. My name is Nick Gumpert, your proactive and trusted real estate advisor, and thank you for joining me. We are in a new year and a new month for January 2022, so let's hit the rewind button and take a look at what the last month has done for us so we know where we're at. So first off, I always start off with a national spotlight to see the bigger picture, and then we'll start dumbing things down to our local pictures from a real estate standpoint. So U.S. households, they own $36.8 trillion in owner-occupied real estate, $11.5 trillion in debt, and the remaining $25 trillion in equity. So you can see homeowners are in a very good spot right now on a national platform. In inflated adjusted terms, homeowners had an average of $294,000 in equity in quarter 3, 2021. This is a historic high. So even though we've had these talks about inflation in the news, it's actually benefiting the homeowner because their numbers also bump up and benefit because of that. Here's CoreLogic's quarter 3 homeowner equity report. You can see that the average home equity gain for U.S. homeowners with mortgages was $57,000. Again, this is on a national scale, not a California or a local scale. Year-over-year percentage increase in equity for U.S. homeowners with mortgages was over 30%. Year-to-year total increase in equity for U.S. homeowners with mortgages is over $3.2 trillion. So this summer, home price growth reached the highest level in more than 45 years, pushing equity gains to another record high. So again, how crazy and competitive is the housing industry right now? This gives you a realistic snapshot to provide you with some objective information. So when you're having conversations with family or friends, feel free to share. This gives you a snapshot of homeowner equity growth, which is still surging, but on a national scale. Again, this breaks down each state. So if you want to zoom in on your own time, you can see exactly how certain states have performed when it comes to the equity in houses. And again, this is on a statewide average, right? So it's not dumbing things down. Nonetheless, it gives you a very realistic snapshot for how certain states are performing. Also, give you some context, year to year, average equity appreciation is in and around 4.14%. So when you're looking at these numbers, just have that in mind. And when you see the lowest performing states, they're still above and well above at that, what is normal in terms of appreciation year to year. Not only have equity gains helped homeowners more seamlessly transition out of forbearance and avoid a distressed sale, but they've also enabled many to continue building their wealth. This is important because a lot of individuals feel like, you know what, it's only a matter of time before this housing bubble breaks and all these foreclosures flood the market. Well, this is saying that because there's so much equity, yes, home values have risen dramatically, but there's equity behind that, which means what? It means that if someone does get in trouble, they have equity in their home, so they don't have to have short sales on their home. They don't have to get kicked out of their home for various reasons. They could sell in a worst case scenario and not be backwards when it comes to numbers. We may see a little bit of an uptick in foreclosure rates in 2022, just an uptick though, from an extraordinarily low level. We're not expecting to see big increases in 2022. We expect delinquency rates overall on home mortgages to actually continue to remain quite low. So although you may hear in some news platforms about, the amount of foreclosures is so much higher, it's up 200%, be mindful of this. Okay, this graph shows where we're at currently, right? Where we're at currently, we can afford to, unfortunately, have some people go under, and the market's going to be just fine. So make sure you are understanding of the context of what it is you're listening to, and don't feel like everything you hear is fact. Because although foreclosures may go up 200% or 300%, whatever it is, just be mindful that our market where it stands currently today has a very good foundation underneath it, and it's not going to tip over based on unfortunately, what could be tens of thousands of people going over and getting out of their house, it's not going to do anything to the economy overall. Okay. Home price forecasts for 2022. This is taking a look at all of the major industries, major companies that forecast home prices and what they will do for the foreseeable future. And so your average for what they project is 5.2%. In the state of California, we saw over 20% appreciation year to year in the year of 2021 from 2020. So in 2022, on a national level, they're predicting in around 5%. Again, the 30-year average in the U.S. has been about 4.14%. So it's still above what the average has been. So some things to think about based on where we're going. So overall, I do think that 2022 will be another strong year for housing. All will be a little bit, albeit a little bit higher mortgage rates, and we do think home sales will continue to rise and actually reach a 16-year high in 2022. Excuse me for that one. And that's coming from CoreLogic again and their senior leader of research. So 2022 should be another strong year for the housing market. Time will tell, of course. Nonetheless, gives you some objective information here to think about, and feel free to share. Let's now look at the state of California and where things have gone. Here's a fun fact for you. More $1 million homes are being sold than $500,000 homes. Right? That's not to say that's the way forward, but that is where we're at. Can't argue it. It's exactly what it is. So just something to be aware of in terms of questioning why are things so expensive? What do things look like currently? This gives you a little snapshot that is where we are. In December 2021, California dropped to its lowest inventory on record at 1.2 months of inventory. You might ask, well, why does this matter? Well, a neutral market, where it's not a buyer's market and it's not a seller's market, starts around 5 months of inventory. So that means if we stopped getting homes on the market, it would take 5 months to sell everything that we have in inventory. Right now, it would only take just over a month to sell everything we have in inventory. Okay? So to give you some perspective, in December 2020, we were at 1.9 months of inventory. Last year in around this time, it was still very much a seller's market. Now it's even more so. So what does that mean? Less supply, higher demand equals higher prices. That's just the nature of the beast and how things work. This gives you a visual. Months of inventory dropped to its lowest level in 7 months in November 2021 and to the lowest levels ever in December 2021. So this is just a little graph sharing where have we been, and that's dating it back a couple of years. Okay, so you can see that's not just 12 months, that's backlogging back to 2019, I believe, is what it dates back to. And you can see how, even in 2019, we're in and around almost 5 months. So we're almost in a neutral market. But that's just California, right? A lot of people want to move here. A lot of people want to live here. And that's just what we're dealing with based on where we are. What does competitive and crazy look like in today's real estate market? I hear so many people say, oh, it's so crazy out there. Let's see what that means. That means the percent of homes sold above their listing price. We topped out at over 70% of homes in November were selling over listing price, right? That's how competitive it is out there. For 15 straight months, over 50% of homes in the state of California have sold over listing price. Let me say that again. For 15 straight months, over 50% of homes that have gone on the market have sold above their listing price. So are you guaranteed a higher price based from where you list it? No. But is it likely? Yes. Why? Because supply is so low. So if you're thinking about selling and thinking about maximizing, feel free to reach out at your convenience because that's what you are looking at currently. The middle graph, that's showing how many multiple offers we have. It was on average in 2021 that there were 5.5 offers. To give you some context, national average is 2.2 offers per listing. So it's a very competitive market. That's just where we're at right now. And over 70% of homes that were listed in 2021 received multiple offers, right? So that means out of every 10 homes, approximately 7 received multiple offers. So why wouldn't the remaining 3? Maybe they were priced too high, right? Maybe the sellers got too greedy, and so it scared off. And so they were waiting for those 1 buyers. Maybe it's just a higher priced property because now you're dealing with millions, right? So it's not for everybody, but it's certainly the vast majority right now. And that third graph shows days on market. In December 2021, we ticked up just a couple days to 11 days was the average amount of days for homes being on the market. But again, you can see backdated a few years, and you can see we're in the days of 25 days on market, 30 days on market, depending on the year. But currently, we are 11 days on average is how long it's taking a home to come on the market. If it's priced well, located well, and shown well, it's taken on average 11 days to get on and off the market. More first-time home buyers have more skin in the game. This is an interesting one. If you look at the top, percent of home buyers with 20% or more down payment, we have 32% in 2021. In 2006, we're in and around that big bubble burst. We had about just under 24% doing 20% or more. So what does that mean? More people are investing in their homes, which is putting themselves in a good position. Why? Because they have more equity in their home that much faster. What does that mean? It means it's less risky. Okay. Percent of buyers with 0 down payment. In 2006, it was in around 40%. You see currently, it's only about 2.7% are coming in with 0 down. A lot of that has to do with lending and what's allowed and what's not allowed. And there's few individuals that now are allowed to come in with 0 down. Some of those few individuals are those that are veterans that have served our country, can come in with 0 down. So something to be aware of with regards to how risky is this housing market. As you can see there, percent of buyers coming in with 0 down payment, it's minimal, right? Which means, again, you have more skin in the game. And then the percent of buyers with an ARM. An ARM stands for an adjustable rate mortgage. So that interest rate is going to fluctuate, whether it's month to month, year to year, depends on how you sign your contract, but that's going to fluctuate. So back in 2006, we saw in around 38% of individuals chose to go that route. And in 2021, you're looking at just over 1% chose to go that route. Why would somebody want an adjustable rate mortgage? Maybe you're hanging on to your place for 1, 2, 3 years and you know you're going to be out and rates are very low like they currently are. Maybe you're an investor looking to take advantage of it and you're willing to deal with a little bit more risk. I would say it's a bad play if you've got an adjustable rate mortgage and you're locked into a 30-year loan because you don't know where those rates are going to go in 5 years, 10 years, 15 years, 20 years, right? You want certainty. So that just gives you a snapshot for what our first-time homebuyers have been doing here as of late. Let's now look into the local spotlight. I focus on the San Gabriel Valley because that's where I live. That's where I service most of my customers, not all of them, but most of them. So let's take a look real quick. La Cañada, Pasadena, San Gabriel, Monrovia, and Claremont. Those are the areas I look to specify my information in. And that gives you some specific information for what those specific cities have seen as of last month, December 2021. Homes sold through the San Gabriel Valley. I track this every day. So far in January 2022, you can see there what value is moving the most based on what part of the San Gabriel Valley, right? So you can take a look at that on your own time. You've got homes sold, you've got condos sold, and you've got townhomes sold. Okay, so just be mindful that this is we're just over halfway through January, but this gives you an objective snapshot of what's moving at what price points and how many. Guys, that wraps up our January newsletter. Hopefully this sheds some light and gives you some more context with regards to what you may hear within the news from other friends or family. If you have any questions or know somebody that may have some questions within the real estate space, feel free to reach out at your convenience. Reach out to me on social media. And as always, thank you for the time. Take care.